An ETF centered around the bullish stock picks of CNBC's Jim Cramer is shutting down. The long Cramer Tracker ETF was launched in February, but only attracted a little over $1 million in asset. And there's a reason. The smart retailers out there know to always go opposite Jim Cramer. Take Nvidia as an example, where a week and a half ago he called this short-term bottom on Nvidia.
All right, it's time for a mad dash. We've got about 7 minutes before we get started with trading here at the New York Stock Exchange. And why not? Let's talk some more Nvidia.
Okay, so Nvidia has been going down. It's been the leader in the decline of the NASDAQ, arguably even more than Apple. This morning, Morgan Stanley recommends it, says it's going to be beat and raised on August 23rd, and Bank of America likes it too. Now, I'm going to warn people, nobody likes Nvidia more than I do. The stock is not rallying yet. It can churn, maybe, flop and chop. I had a great chartist on, Larry Williams, who says it's going to be the worst stock in the month of August. But all I want to do is tell people, look, just because the stock has a great product, we do. We know that they've got the graphics cards for AI. Does not mean that it can grow to the sky. And this is a quarter that's already been pre-announced with 4 billion more sales than people expected. And everyone is turning on it. I was at a party this weekend, okay? And all I heard was like, you stuck me in Nvidia.
Are you kidding me?
Surrender.
Are you kidding me?
Like, what do I do? How do I get out of this Nvidia?
You stuck me.
Yeah. How do I get out of this Nvidia is the most important thing. And one person had the guts to call it a dog. I named my dog Nvidia, and then it died. So I didn't need to hear the post-mortem obituary about Nvidia. So I will just say, look, don't get in it then. If you can't take the pain, don't get out of it. But I still like it. That doesn't necessarily mean I'm saying buy the stock.
Right.
I am saying that we have stocks in this market that go down. Okay. ServiceNow, I like that stock. It goes down. Salesforce, I like that stock. Dreamforce is coming. Goes down. Stop sweating the program and just accept the fact that stocks go down. And that's all I'm saying.
Understood.
Stocks go down.
Right. But you still want to own it. You still want a long term.
To take a loss.
And how can you not? And by the way, that's just 1 year. We can go back 10 years.
200%. Best than that.
You've liked this stock. We should point out you've liked this stock for I don't even know how long.
I've liked it since I first saw it when it was in
8 years. I don't know, 9 years.
When Aldi North America.
That's how you create.
I got it right here. Okay, I got it right here.
Look at that.
The reason I got it right there is because I went out with the Aldi North American exec, and he goes. And I said, who are all the semiconductors? He said, they're a company called Nvidia. I said, that's gaming chip. He goes, yeah. Why don't you do some homework? When they say do some homework, and I don't know, I do it. And I came back and said, maybe this is the greatest story of all time. And I'm saying that those who are now saying, how could you have heard me, Nvidia? Get the heck out of Nvidia. I don't care who you are or what you are. I'm finished with you. Okay.
This morning, Nvidia gapped higher, hitting that round hole psychological number of $500 due to their stellar earnings. This article is coming from CNBC. Nvidia shares open at record high after big earnings beat. Shares of the chip maker Nvidia rose 5% in Thursday morning trading after the company reported a beat on the top and bottom lines and offered strong guidance for the upcoming quarter. Analysts also honed in on strong guidance for the upcoming quarter. The company expects around $16 billion of its revenue for its fiscal third quarter, up 170% compared to a year ago period. JP Morgan Harlan Sur increased his price target from 500 to 600 and reiterated an overweight rating on the stock. Expectations were high coming into the print, and the team managed to deliver results outlook that were well above buy-side expectations, driven by the massive demand pull for its data center profits. Heightened AI-driven demand for Nvidia chips has been a boon for the chip maker, which has historically focused on graphics processing units or GPUs. As companies across industries move to build out their AI chops, there has never been more demand for Nvidia chips. Now we see that price is selling off at this time. However, the sell-off should be an opportunity for those who want to get long to go long the stock, as many analysts on Wall Street are going to be lifting their future price target. I just raised mine to $600. Now, big picture, I was looking for a sell-off to get to the weekly buy levels at 380, right? After this massive move higher, a pullback was inevitable, but that was short-lived. Why? Because people can't get enough of Nvidia's chips. They can't meet demand. Going back to the daily chart. Now this was the previous high. Price is pulling back right now to that previous high. It'd be nice if price closed that gap at 480. As that previous high should serve as support now. If you wanted to go long, an aggressive buy would be to go long now. Conservative buy would be wait for this gap fill. The ultra conservative buy would be wait for a sell-off potentially that we may have in September or October. See if price can get down to the 380 level, but I'm not seeing that at all. I'm not seeing that at all. So, got three options to get long if you haven't gotten into Nvidia yet. This gap fill, which was the previous high, this gap fill from today, or potentially waiting until price declines to the weekly bias level at 380 to go long. Again, I don't see this happening, so you got one of two options to decide from. Thanks for watching. Subscribe. Please like the video.